All right, and welcome to another session of the My Solo 401k Financial, My Community Daily Webinar Series. Thank you so much for joining. We're excited to discuss today Solo 401k Contribution Calculator. We're focused today on S-corps and C-corps. What we're going to cover today is contribution clarity. Discover how much you can contribute based on your W-2 wages. Discover the contribution split. In other words, understand the breakdown between employer and employee contributions. Mega Backdoor Roth. Learn how after-tax contributions enable this powerful strategy. We're going to go through some real-time demos, giving you step-by-step examples using actual income scenarios. Ultimately, it's the essential guide to retirement savings for S-corp and C-corps. Why this session is for you? Demystify how to reach the full 70,000 or more if age 50 or older contribution limit for 2025, allowing you to unlock the full limits, avoid pitfalls. We're going to identify and prevent common mistakes, giving you actionable tools so you can gain the clarity and practical tools needed to optimize your 2025 contributions. The goal being, by the end, you'll have the confidence and knowledge to make 2025 your most impactful year yet for solo 401k savings. So as always, the presentation is being provided for educational purposes only. It should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. If you're watching this on YouTube or LinkedIn or Instagram or X, please subscribe so you'll get notifications of when we go live. We go live twice per day, once at 10 a.m. Pacific, 1 p.m. Eastern. We're back again at 1 p.m. Pacific, 4 p.m. Eastern. You can see, for example, tomorrow we'll be back to discuss when should I fund my solo 401k in the morning. In the afternoon, we'll be here to discuss the solo 401k contribution calculator live examples for a business tax as a partnership. So with that stated, also, if you do have questions or topics you want to discuss, please chat those over. We love to discuss questions and topics. But let's jump in with some foundational concepts before we go through some live examples with the demo. So a solo 401k, who is it for? For someone has an owner-only business with no full-time W-2 employees. In other words, it's a 401k plan for self-employed individuals. So think like an independent contractor, maybe a solo practicing professional, such as an attorney or a medical professional or a realtor or a CPA. Ultimately, the key is that you're self-employed with no non-owner, non-spouse, full-time W-2 employees working for any business owned by you or a spouse, if any. Some of the top eligibility considerations are going to include, do I need a separate entity? The answer is no. So even though we're here today to focus on businesses taxed as an S-corp or a C-corp for purposes of the contribution examples, you don't have to have an S-corp or a C-corp in order to be eligible to set up a solo 401k. We got many individuals, for example, who operate as sole proprietors, and that's fine. The key is that you report earned self-employment income on your taxes. That could be Schedule C, for example, for a business that is taxed as a sole proprietorship, maybe a single member LLC, taxed as a disregarded entity, where the income flows through to the 1040. W-2 wages in the case of a business that is taxed as an S-corp or a C-corp. Income reported on line 14 of a K-1 in the case of a business taxed as a partnership. There's no minimum amount of earned self-employment income that's needed to be reported in order to be eligible to set up a solo 401k. But of course, your ability to contribute to the plan is a function of your earned self-employment income. So if you don't have a lot of income, you're not going to be able to contribute a relatively high amount, but you'd still be eligible to set up a plan. Your spouse or business partner can participate as long as your spouse or business partner are reporting their own earned self-employment income, such as their own Schedule C or their own W-2 or their own K-1, in the case of a business taxed as a partnership. You can set up a solo 401k even if you've got a W-2 day job, even if you participate in your W-2 employer-sponsored plan, as long as you've got that separate earned self-employment income with no non-owner, non-spouse, full-time W-2 employees. So that's what gets you in the game. That's what enables you to set up a solo 401k. Once you set up a solo 401k, you can start to reap the advantages. So a solo 401k has the highest contribution limits for any defined contribution plan available to self-employed individuals. And then if you have a plan like ours that allows it, you can make mega backdoor Roth contributions. You can take a 401k loan. You can invest in alternative investments, right? All the bells and whistles. It's a fully featured plan. Now, we want to go through some contribution examples. But before we do that, let's knock out the question. Thank you so much for bringing the question. I was referred by one of your existing clients. Thank you so much. I'm looking at an IRA LLC for self-directed IRA. Is it possible to use a holding LLC that one might have, for example, in Nevada or Wyoming for purposes of anonymity? Yes, I mean, ultimately, we would set up the LLC in whichever state the client wants to do so. So if they want to set it up in Nevada or Wyoming, that's totally fine. Now, if they're doing it for anonymity, they're most likely going to need a registered agent, etc. So it might make sense just to make sure you've met your anonymity objective if you set up the LLC and then just bring the LLC and then we can take it from there, right? With helping you be able to transfer money to that LLC to invest, for example, in alternative investments. I saw your earlier session about pre-IPO items. I understand those are options for solo 401k through Forge. Does that also apply to IRA LLCs? Yeah, great question. And we'll be here on Friday to discuss investing in SpaceX stock through a pre-IPO SpaceX stock through Forge using a solo 401k. So yes, Forge definitely opens up accounts for IRA LLCs. One would still need to qualify as an accredited investor, though. Keep that in mind. But you could definitely reach out to us, for example, at business@mysolo401k.net, or go to mysolo401k.net/book to schedule a call, and we can discuss that in more detail as far as next steps. But great question. Thank you so much for joining. So now we're going to go through some scenarios. If there are more questions, please don't hesitate to chat it over. We love to take the questions. And also, if you're finding this to be helpful, if you can please like this video, whether you're on Instagram or LinkedIn or X or YouTube, just to help us get the word out to other self-employed individuals or other individuals looking to take control of their retirement money. We'd really appreciate that. So what we want to do is, first off, go to our website. So if you go to mysolo401k.net, we've got a calculator on our website that'll help run these numbers. So we're going to go through some examples to show how one would use that calculator. But you can access it easily at mysolo401k.net. Under Learn, then click on Online Tools. That'll take you to this page. And then from here, that'll take you to Online Tools. And then from there, click on Solo 401k Contribution Calculator, which will then pull up this page. You can enter your name if you want to, or just skip that field, enter your age, enter the income from your business, which is going to be W-2 wages. In the case of a business tax, is an S-corp or a C-corp. Make sure corporation is selected, then choose the year, and then it'll give you a printout, a PDF that you could save. It's going to show you the breakdown, for example, between employee and employer. And then it doesn't talk about after tax, but we're going to go through some examples so you can understand that. So what we want to do is go through at least 3 or 4 scenarios here just to help paint the picture. We're going to start out with a baseline scenario and then modify it to illustrate different points. So we're going to assume that it's a self-employed business, taxed as an S-corp. There's one participant who's under age 50, does not make contributions to another plan like a day job plan. Their goal is to first maximize the pre-tax contributions to get the income tax reduction benefit now for 2025. And then, if possible, make any additional contributions as Roth or voluntary after-tax contributions. We're going to assume that this person has $100,000 of W-2 wages from their self-employed business taxes and S-corps. So let's assume that they're 45. They have $100,000 of W-2 wages from their business taxes and S-corp. We're going to let that run the numbers. So we've got age 45. No contributions to day job plan. Business S-corp. W-2 wages, $100,000. Year 2025. So you got different buckets that you can make contributions to. For example, 1 is the employee bucket. 2 is the employer. 3 is the voluntary after tax. And let's try to make this just a smidge bigger. Let's go, here we go, zoom. Okay, great. So now we can hopefully see that even better. So this person has $100,000 of W-2 wages. They're trying to make contributions for 2025. And you can see it's got the printout with the bar graphs showing the difference between a solo 401k versus other options like a simple or a SEP. And you can see how much more this person can contribute to a solo. So they can contribute for 2025, $23,500 to the employee bucket, which we're going to assume is pre-tax. They can make a employer contribution of 25% or $25,000. And you can see that it's giving us these numbers here. The first line or the first row is the profit sharing, also known as the employer, 25,000. The second is the deferral, also known as the employee, 23,500. So that's also going into that same pre-tax account. And we help our customers open up accounts at the bank or brokerage of choice. We help our customers open up accounts at hundreds of different banks, many different brokerages, like Fidelity and Schwab, just to paint the picture. So that's got 48,500 now between employee and employer in their pre-tax solo 401k. They've then maxed out the pre-tax benefit for 2025, but they still want to make additional contributions if possible. And yes, it's possible. So they can contribute 100% of their self-employment compensation, in other words, the W-2 wages from their self-employed business, all the way up to the overall limit, which is $70,000 for 2025, as a voluntary after-tax contribution. Now, they still have to consider that overall limit, so in other words, the sum of employee, employer, and voluntary after-tax cannot exceed the overall limit or their self-employment compensation, whichever's less. Here, that's $70,000, right? Because their wages are greater than the overall limit. So in that case, they can contribute $70,000 less the employee, less the employer, meaning $21,500 as a voluntary after-tax contribution, which could then be transferred from that voluntary after-tax account either to a Roth solo 401k or a Roth IRA. This is the mega Backdoor Roth solo 401k contribution that you may have read about. So that's a great example, right? They've contributed $70,000 now to their solo 401k. So let's take a different scenario now. Let's change this assumption. Everything is the same, except we're going to change it from 100,000 to 50,000. So how much more can they contribute to the plan? Or how much less, can they contribute? Because now their income is less. So everything is the same, right? 45, no contributions to a day job, S-corp. Now we got $50,000 of W-2 wages, 2025. They don't make contributions to a day job. So they're still going to be able to contribute $23,500 as an employee. So that's pre-tax. Now they can do $12,000. So we go back to the calculator. Let's use the calculator to see what it comes up with too. So now they can contribute $12,500 as an employer. And then they can do the difference up to $50,000, right? Because they can do 100% of their wages. You can't save more than you earn, but 100% of their wages, dollar for dollar, up to the overall limit. So in other words, whichever's less. Here, their wages are less. So it's $50,000 less the employee, less the employer. So that's another $14,000 they can make as a voluntary after-tax contribution and then move it from the after-tax account over to the Roth account. So that's example number 2. All right, so now let's hide this and we can talk about another example here. So let's go back to the slides and let's look at a third example. So now we're going to assume self-employed business, taxes, and S-corp under 50 years of age. They've maxed out contributions to their day job plan. They've got $100,000, so they're back to $100,000 of W-2 wages. Their goal is still to be able to maximize pre-tax contributions and then make whatever's left as a Roth or a voluntary after-tax. So they're 45. Here they've maxed out to day job plan. Still an S-corp, $100,000 of W-2 wages, 2025. So they're not going to be able to make any employee contributions because they've already hit that limit under their day job plan. They can make employer contributions equal to 25% of their W-2 wages. So that's $25,000. That'll go into the pre-tax bucket. And they can do the difference up to $70,000. So their ability to make voluntary after-tax contributions to the plan is not reduced by contributions made to a day job 401k plan. So in other words, that voluntary after-tax contribution limit applies at the plan level. It's not reduced by contributions made to a 401k sponsored by an unrelated employer, like a day job employer. Now, the one exception to that general rule is the 403b exception. So if those day job contributions were made to a 403b plan, then yes, you would have to aggregate. But here we're assuming that it's a day job 401k plan. So again, they can contribute 100% dollar for dollar up to the overall limit as a voluntary after-tax contribution. So here, the overall limit is less than their compensation. So we would use $70,000 less that employer contribution, but not reduced by the day job 401k contribution. So that means they're going to be able to contribute another $45,000 as a voluntary after-tax contribution, then move that voluntary after-tax solo 401k funds over to either a Roth solo 401k or a Roth IRA. Okay, wonderful. So now let's go through just one more example. Okay, so here we're going to assume, and let's hide this so we can take the next one too. Here we're back to a self-employed business, taxes and S-corp. The person's under 50 years of age, does not make contributions to another plan, but here their goal is to maximize Roth and or voluntary after-tax. And again, they have $100,000 of W-2 wages. So let's assume they're 45, no contributions to day job plan, S-corp, $100,000 of W-2 wages from their S-corp, 2025. So here they could still make the $23,500 as an employee contribution, but that would go into the Roth solo 401k, so a separate Roth solo 401k account. So now they got $23,500 in that Roth solo 401k account. They're not going to make any employer contributions because this person is not interested in making pre-tax contributions. They're only interested in making Roth contributions. Yes, employer contributions can be made as Roth contributions, but because of the complexity of the Roth employer contribution rules, in our experience, most customers would simply just choose to skip making employer contributions as Roth contributions if their goal is to ultimately make Roth contributions or mega backdoor Roth contributions, to skip making employer contributions altogether and instead just simply make voluntary after-tax contributions. So if they're not making any employer contributions and they've made $23,500 in employee contributions, they're going to be able to contribute the difference up to $70,000 as an after-tax contribution. So that's $46,500, which can then be moved from the after-tax account over to the Roth. So at the end of the day, for 2025, they now have $70,000 in their Roth solo 401k, which has that potential for tax-free growth. So fantastic. Hopefully you found this to be helpful. Again, if you found this presentation to be helpful today, it would be great if you would like the video on whatever channel you're watching on, whether it's LinkedIn or YouTube or Instagram or X, to help us get the word out to other self-employed individuals, to other freelancers, solopreneurs, just like you. As you might imagine, there's a growing number of self-employed individuals, so this information could be really helpful to them as they try to secure their retirement. Additional resources, We've got our community, mysolo401k.net/my community. We've got over 30,000 members. It's totally free to join. All are welcome. It's not just limited to customers. It's a vibrant community. We have forums. We've got a library of videos and webinars. So please don't hesitate to join. We have our solo401k.ai, the industry's first AI, which is a great resource and tool to quickly find answers to questions and other resources. We've got our daily webinars, again, twice per day, once at 10 a.m. Pacific, 1 p.m. Eastern, back again in the afternoon, 1 p.m. Pacific, 4 p.m. Eastern. It's totally free to join. Just subscribe so you get notifications on whichever platform you watch on. Come, ask questions, hear the content we wanted to bring and share. So thank you so much. We appreciate all the engagement. All the best, everyone. Until the next time.